But as promised, we told you that we'll have a management, and Titagarh Rail, which delivered a driverless made-in-India train set to Bengaluru's Metro Yellow Line, joins us now. The management says that this is the first made-in-India passenger rolling stock that is set to run on the key 18-kilometer stretch. To discuss more on this, as well as the company's 2025 outlook, joining us now is Umesh Chowdhary, Vice Chairman and MD at Titagarh Rail Systems. Good morning, sir. Thank you so much for joining us. Mr. Chowdhary, first up, what has been the total delivery so far as this particular train set is concerned? What is pending, and will you be able to deliver all of them by FY25 end itself?
Yeah, good morning. So this was the first first train that we delivered for the Bengaluru Metro. This was a contract which was placed on CRRC, and owing to the Make in India policy, this had to be manufactured in an Indian company. So we partnered with CRRC to manufacture these coaches. This is a contract of 206 cars, out of which 6 cars have been delivered now. And the balance will be delivered over a period of time. So definitely not FY25. The second train will go in end of February this year. And then so on. We will ramp it up to 2 trains per month in about 4 to 5 months from now.
Hi, Umesh. Congratulations. Is this completely indigenous, this driverless train?
Yes. So the first train that has come out, the car body came in from CRRC, but the coming trains, it will be 100% indigenous. Everything will be made in our plant. Our entire plant has been set up. It's a fully automated plant to manufacture up to 400 metro cars per year, starting from the car body up to the complete testing.
So this driverless, what's the overall contract size?
Each coach costs about 10 crores on a ballpark. A metro coach costs about 10 crores on a ballpark number. In this case, since it is the prime contractor is CRRC, we are only doing the manufacturing part of it. So we only bill for the manufacturing of the coach.
Okay. Mr. Chowdhary, let's talk a little bit as far as the tendering pipeline was concerned. We understand H1 was quite muted given the fact that there wasn't too many tenders that took place. Correct us if you're wrong over there. How's H2 panned out so far, especially Q3? You had given us earlier a run rate of close to 3,000 wagons delivery per month. So where do you expect to stabilize by the end of FY25 and targets for FY26?
So it's 3,000 wagons per quarter. As far as the wagon, we operate in 2 segments. One is the freight segment, one is the passenger segment. So as far as the freight segment is concerned, in the previous quarter, that is in the September quarter, we achieved a run rate of about 900 wagons per month. That is about 2,700 wagons a quarter. The target is to get to 1,000 wagons per month or 3,000 wagons a quarter. December quarter, as it is already there in public domain because of some problems of wheel supplies from the rail wheel factory Bangalore, there had been a bit of a challenge, but we are fairly confident that from March quarter onwards we'll be able to stabilize at the 3,000 wagon per quarter run rate. As regard the wagons is concerned, the tenders are concerned. The tender pipeline remains robust. For the freight side, we had got the 3-year contract in end of 2022 or so, beginning of 23. So, since it was a 3-year contract, we do not expect mid-term contracts to come in because it has to be executed. And towards the end of the contract, the new tenders will come out. The railways capacity expansion plans are going on well as per plans, and we don't see any reason, particularly with the government's focus on reducing the logistics cost as a percentage of GDP, that there would be any demand shortfall or shortages that will come.
Okay. The other thing which we want to understand is the EBITDA margin. EBITDA margin, last time you spoke to us, you said it's likely to be around the 12% range. Q3, you mentioned a few delays as far as deliveries are concerned on the back of various challenges that you're facing. So EBITDA margin, how does it get impacted for FY25? And the second question is, last time you had alluded to the fact that there were some issues in procuring visas for Chinese internationals, to help in project execution. So any update on that?
So the very fact that the trains have gotten rolled out is basically based on the fact that these problems were resolved, and we've been able to set up the plant, completed Even the Honorable Union Minister of Housing and Urban Affairs, who joined virtually for the flag off and a virtual tour of the plant, was very appreciative of the Make in India and Atmanirbhar nature of the plant, which is very, very modern, very comprehensive. I would say it is one of the only of its kind in the country for the metro coaches. As far as the margins are concerned, we never really look at margins on a quarter-to-quarter basis, but on an annualized basis, and we would be still staying with the same margin levels. So, one quarter can be plus or minus, but over the year, we'll be able to maintain the same kind of EBITDA margins.
Umesh, last year, what was the expectation? I mean, what was planned in terms of a railway budget capex? And how much have we achieved as we come to the close and we enter the next budget?
So, I would not be able to comment on the macro level because, that's something which we'll have to wait for the railway numbers to come out. But I can only speak about the trend. I think that the trend has been pretty much on track. The focus, obviously, after the unfortunate accidents that had taken place in the railways did shift to a little bit of signaling and safety, which is perfectly understandable, and I would say it is good because at the end of the day, if the signaling systems are better, then they can operate more number of trains on the same railway track. So, as our business is concerned, as I mentioned, that they had ordered for 3 years at a row, and even for the Vande Bharat, we have a long-term contract. So, we really do not look at tenders coming on a regular basis. It's not a consumable or a commodity which can happen. Purchasing happens on a regular basis. These are lumpy tenders which come, and then execution is over a period of time. So we see absolutely, the trend is exactly as we had wanted it to be.
Mr. Chowdhary, one last question from our end, and we'll keep it a little short. At the end of Q2, we understand that the order book for wagons was close to 14,500. So 14,500 was the order book for wagons. We understand that post-delivery, that particular number would have probably dropped. End of Q3, where does that particular order book stand? And number two question, as far as Vande Bharat trending is concerned, how is that shaping out? You've given us a strong outlook, but could you also give us a timeline as to how exactly you expect order books to be replenished?
So as far as the wagon order book is concerned, we'll come up with the numbers of the December quarter when we come out with the results of the December quarter. But it really, the order book in the wagon, as I just explained a little while ago, does not happen. It's not a book-to-bill ratio which can be maintained on a one-on-one basis, on a quarterly basis. It is the order comes and then it is gradually declining, and before it comes down, then the new order comes, so it goes up again. So that's how the ordering of the railway wagon happens. As far as Vande Bharat is concerned, we got a contract along with BHEL for 1,280 coaches, which was to be delivered over the next 5-6 years, and then there is a 35-year maintenance to that. So the first train, which was supposed to be delivered in June 2025, has got deferred because the railways wanted a change of specifications from 16-car unit to a 24-car unit. So we are now expecting the first train to be delivered somewhere around December 2025 or January 2026. And our production line, which we have constructed for Vande Bharat, is also coming up very well. So that will, in our passenger side, we will have a capacity for 400 metro cars per year and 400 Vande Bharat cars per year.
Okay, thank you very much for joining in. Let's move